Hi, my name is Michelle Holmes, and welcome to another edition of CMS Forex News. Today is Wednesday, April 23rd, 2008. First quarter Australian consumer prices were up 1.3% on the quarter and 4.2% in annual terms. The annual rate was at the highest level in 7 years. In addition to the globally rising energy costs, the boom in Australia's export industries has kept employment at high levels, driving up wage inflation as well. The news boosted the Aussie following the release, and the Australia-US dollar pair rose to a 24-year high. As European trading progressed, the Greenback strengthened and pared down some of those earlier gains by the Aussie. The data implies that the Bank of Australia has little room to lower rates, even as the overall economy shows signs of slowing. The Eurozone Services PMI beat expectations of a decline and showed improvements for the sector in April. The increase was led mainly by Germany, but was not spread throughout other parts of the Eurozone. The picture was not as rosy for the Eurozone's manufacturing sector. The PMI fell to 50.8 from its 52 reading in March. Germany also saw its PMI slip from 55.1 to 53.6. Manufacturing is being squeezed by euro appreciation and waning demand from foreign markets as the global slowdown widens. The Euro-US dollar pair retreated more than 100 pips today from yesterday's record high. The euro declined after Luxembourg Finance Minister Juncker warned against US dollar weakness and the surging euro. Manufacturing weakness also validated Juncker's concern that economic growth would be affected by the recent developments in the FX market. The Bank of England minutes showed that 6 policy members voted for a 25 basis point rate cut. 1 voted for a 50 basis point cut, and 2 members voted for no change. The result was a 7 against 2 in favor of a cut, which was determined to be at 25 basis points. In a separate release today from the British Bankers Association, banks approved £35,400 in mortgages during March, the lowest since records began being kept in 1997. The pound-US dollar pair continued its volatile trading this week. Following the weak numbers from the UK release, the US dollar rallied 160 pips against the sterling, pairing yesterday's losses. Traders and investors have been very sensitive to the news this week as they look for direction from fundamentals. In Canada, retail sales unexpectedly fell in February, declining 0.7%. The decline was spread among all sectors. After 4 months of strong gains, the sales in the automotive sector decreased 1.3%. Retail sales excluding autos was down 0.3%. After trading in a very narrow range overnight, the US-Canadian dollar pair surged following the poor Canadian data and general US dollar strength. The pair broke through this week's previous highs, rallying 120 pips before testing the 1.02 level. Tonight, the Reserve Bank of New Zealand will decide on interest rates, and later Japan will post its corporate service price index. Overnight, Germany will release its IFO Business Climate Index, and the UK will unveil retail sales figures. Tomorrow, the U.S. has 3 releases: orders for durable goods, weekly jobless claims, and new home sales. Canada finishes off the day with its monthly policy report. That wraps it up for today. Join us here again tomorrow at cmsfx.com.